It is 8:43 a.m. Pacific Daylight Time. It's the 14th day of April 2026, and this is episode 1299 of Bitcoin, and about to turn over to the 1300 series. I hope it doesn't bring bad luck. It takes quite a bit of energy for me to do this show. If you get any kind of value out of it, please consider boosting the show or streaming Satoshis while you're listening live on Fountain.fm or any Podcasting 2.0 enabled app, because Podcasting 2.0 is really where you're going to get the best value out of podcast chapters, chapter art, cover art, transcripts, clips. I mean, it's like if you're using a legacy podcast app, you're really not getting all you can get out of podcasting, because Podcasting 2.0 has just got a whole slew of features, including supporting your favorite podcaster. And if I am bringing you value, if you could slip me some value through Satoshis streaming to me or Boost, I would appreciate it. And if you just do not have the Satoshis, or even want to spend the Satoshis, and man, I can understand that, spending your time with a 5-star review on Apple Podcasts, Spotify, Amazon Music, or YouTube, I have links, all the URLs directly to the show, to those particular platforms for the show are in every show description that I give. Just pick one that you're signed up for and give me a 5-star review, because that really supercharges the algorithms and allows a lot of people that wouldn't normally be able to find this show the ability to find this show. We call it surfacing, and every single 5-star review helps in that surfacing pattern. So please either, donate some Satoshis or donate your time if you find value in this show. Today, we're going to deal with a new piece of what I can only assume is going to be financial FUD around Bitcoin, because the DOJ has opened up $40 million compensation process for the OneCoin crypto fraud victims. Do you remember OneCoin? If you don't, you're going to hear about it right now out of Decrypt Stephen Graves. The U.S. Department of Justice has announced a compensation process for victims of OneCoin, the fake cryptocurrency scheme that defrauded investors of some $4 billion through a global multi-level marketing network from the years 2014 through 2019. Victims can now file petitions to claim their share of over $40 million in forfeited assets at OneCoinRemission.com. That's OneCoinRemission.com, through a process administered by Kroll Settlement Admin LLC. The deadline for submissions is June 30th. Quote, victims are at the core of everything we do at the Department of Justice. No, it's not. Anyway, that was Assistant Attorney General A. Tyson Duva of the Justice Department's Criminal Division in a press release. He continues, quote, as we did in this complex investment fraud case, the department pursues forfeiture to take the profit out of crime and then use that money to compensate victims whenever possible, end quote. Jay Clayton, U.S. Attorney for the Southern District of New York, called the announcement an important step toward returning funds to those who were harmed, while James C. Barnacle Jr., Barnacle, Assistant Director in charge of the FBI New York Field Office, noted the monumental victim losses, saying many unknowingly depleted their savings for a fraudulent investment scheme in an emerging financial ecosystem that would never pay out. Well, the available compensation funds stem from successful prosecutions of OneCoin's leadership. Carl Sebastian Greenwood, co-founder of OneCoin, was sentenced to 20 years in prison, 20 years in 2023 for his role in orchestrating the fraud, with authorities seizing assets that now form part of the victim compensation pool. Ruja Ignatova, The scheme's other co-founder, known as the Crypto Queen, remains at large. International authorities continue to hunt for Ignatova, with the FBI adding her to its 10 most wanted fugitives list and Europol placing her in its most wanted register. In 2024, the U.S. State Department raised the bounty on Ignatova to $5 million, but her disappearance remains unresolved, with alleged sightings in Russia competing with theories that she just simply may have been killed years earlier. The Justice Department continues to pursue Ignatova as part of the ongoing investigation, though her absence hasn't prevented authorities from recovering funds for victims. Earlier this year, a court in Gunzuri seized $11.4 million linked to the OneCoin fraud. I don't know where Guernsey is, but I'm sure that they're very serious about their stuff. All right, so OneCoin took in $4 billion, all of it basically stolen. And if you don't remember the story, OneCoin was quote unquote a cryptocurrency. And it was a marketing bonanza. It was a marketing scheme tour de force. And they just bilked everybody they could out of as much money as they could. And it was so successful that they were able to clean up to the tune of $4 billion. Billion. I mean, it like immense, right? And then the whole thing fell apart, and it turns out there was never a blockchain. It was just a ledger. It was just a ledger. There was no actual token. There was no actual technology behind OneCoin. It was simply ledger entries, and everybody got smoked. So now there's $40 million out of $4 billion. They're going to pay out $40 million. So where's the FUD? I guarantee you people are going to start writing stories about how they're going to sell Bitcoin and the Bitcoin price is going to fall, and don't believe it. It's not that the story's not true. They're going to pay out $40 million or whatever, but it's just going to be used as FUD. I guarantee it. But it's always nice to remind ourselves about how scammy this space not only used to be, but still is. I'm just saying. Okay. Goldman Sachs is in the news this morning. $3.5 trillion Goldman Sachs, and that's what they're valued at, I suppose, with all their assets under management. They have filed for a Bitcoin premium income ETF. Micah Zimmerman writing for Bitcoin Magazine. Goldman Sachs has filed to launch a premium Bitcoin income ETF, signaling yet a deeper push by the Wall Street Bank into crypto-linked investment products that blend Bitcoin exposure with an options-based income strategy. Yay! The move follows similar premium income designs from issuers such as BlackRock, Morgan Stanley, and Grayscale that seek to turn BTC's volatility into a steady yield stream for investors. So what does a Bitcoin premium income ETF actually do? Well, it typically holds spot BTC exposure, often through shares of an existing spot Bitcoin ETF, so think derivative. And then it sells call options on that position to generate option premium income. The covered call structured collects cash from option buyers and distributes that cash as income in exchange for giving up part of BTC's upside above a set strike price. In practice, the fund benefits when BTC trades sideways or rises only modestly because it keeps the option premiums while price moves stay inside the range of the sold calls. When BTC rallies sharply, the ETF's gains are capped beyond the strike since it has already agreed to sell that upside to option buyers. During sell-offs, the fund still absorbs most of the downside, with the collected premiums providing only partial cushioning. So sort of like shock absorbers. But remember, it's a derivative. It's a derivative product. You're not actually holding the Bitcoin itself. You're basically holding something that holds exposure to Bitcoin's price, and it's all Vegas, man. It's all Las Vegas. So let's continue. Goldman Sachs has already built a large balance sheet position in spot Bitcoin ETFs from other issuers, with filings showing more than $1 billion of exposure through funds such as BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund. A proprietary Bitcoin premium income ETF would shift the bank from simply holding third-party products to manufacturing its own yield-focused vehicle for clients. That step aligns Goldman with a growing trend. Traditional asset managers now design Bitcoin strategies that look and feel like familiar equity income funds, using covered calls to turn volatility into distributions. And for investors, a Goldman-branded product could broaden access to options-based Bitcoin income strategies inside brokerage and wealth platforms that already distribute the firm's ETFs. For yield-seeking investors, be careful out there, yield-seeking investors. For those investors who want BTC exposure but prefer a smoother payout profile, a premium income ETF offers a trade-off: higher potential cash distributions in exchange for surrendering a chunk of long-term upside. It may appeal to advisors and institutions that view pure spot Bitcoin ETFs as too volatile, yet still want some regulated exchange-traded access to the asset class. Now, at the market structure level, Goldman's move underscores just how fast Bitcoin is integrating into mainstream portfolio tools, from plain vanilla spot ETFs to more complex options overlay products. For the sophisticated investor, all I can think of is that dude that drinks the Dos Equis and he's wearing that suit and the ascot tie and he's looking all prim and proper and shit, right? So pretentious, I swear to God. If the SEC approves the filing, it could intensify competition in a new niche of Bitcoin income strategies and further legitimizes the idea of using Bitcoin not only as a speculative asset, but as an underlying structure for yield. Good God. Yeah, this is going to be for highfalutin high rollers. If you're retail, dude, just as I will always say, I've always said it, just buy the Bitcoin. Don't worry about the volatility, man. It's a long-term play. Bitcoin has always been a long-term play. And if you're somebody that wants to get rich quick, I highly discourage this kind of activity unless you are literally a sophisticated trader. Somebody really knows what the hell they're doing. And I'm not talking about being a day trader. I'm talking about really understanding the math behind these kinds of products. Because honestly, this description, Micah Zimmerman's writing for essentially trying to explain it to retail, but the behind the scenes of yield bearing products and covered calls and derivative aspects of Bitcoin price exposure, there's a lot of math behind that. And it really is much simpler to simply buy the Bitcoin and hold the Bitcoin yourself. But it can't be said enough that here comes Goldman Sachs. This is a company that has had some internal strife as to what they believe Bitcoin actually is. Is it rat poison squared? Is it a Ponzi scheme times 10? Is it whatever? Or is it an actual product that they want to get into? And it seems to me that Goldman Sachs has a schism inside of them where it's actually both. And you do have to wonder, are the people at the top of Goldman Sachs putting these ideas of Bitcoin being a Ponzi scheme out to perform, societal price depression in Bitcoin? So because they were so busy for the last 17 years pointing at us and laughing that they forgot to take a position. So now they have to call it everything under the sun, from, the death of grandma to it's going to boil all the oceans while they structure products for release to retail and other people like sophisticated investors. And I think that that's what all that talk is from Goldman. I don't believe for a second that anybody, I don't think Jamie Dimon actually thinks that Bitcoin is bad. I think that they're embarrassed that they did not structure themselves in a way that would put them in the catbird seat. And now they're having to play catch up. And during that time, they can leverage the name, hey, we're Goldman Sachs. And when we say Bitcoin is a Ponzi scheme, we mean it. And a lot of people believe that shit. And they will stay away from it. And as the more people they can get to stay away from actually purchasing the underlying asset that is Bitcoin, the price doesn't explode. And people like Goldman Sachs have time to structure these products and get them ready for release. I believe 80% of all the bullshit these suit-wearing bankers have been saying about Bitcoin is all just them trying to make sure that people don't get in before they can. I really do believe that. Then we have Deutsche Börse. Here's another story. Deutsche Börse acquires Kraken stake in a $200 million deal, Vismaya V Decrypt.co. Deutsche Börse AG's $200 million bet on crypto exchange Kraken could change how traditional financial institutions stake their claim in digital assets, according to one expert. The Frankfurt Stock Exchange operator has acquired a 1.5% fully diluted stake in Payward Incorporated, that would be Kraken's parent company, in a deal expected to close in the second quarter pending regulatory approval, according to Bloomberg. The transaction values Kraken at roughly $13.3 billion, down from its $20 billion valuation during a November fundraising round. Quote, we're seeing a clear wave of consolidation and partnerships as traditional financial institutions move to catch up with crypto, particularly around tokenized assets, Ruchir Gupta, co-founder of Guild Finance, told Decrypt. Quote, it's hard for them to build out these businesses from scratch. Therefore, they are investing in incumbents to gain an edge, he said. Deutsche Börse's move follows that of Intercontinental Exchange, the parent company of New York Stock Exchange, which invested $200 million in crypto exchange OKX earlier this year in a deal valuing OKX at $25 billion. Quote, large traditional players are under pressure to keep up with the momentum and the regulatory clarity, as well as buying out stakes, especially in companies that are still private. It's one of the easiest ways to do that, Gupta told Decrypt. Quote, I see this as an important milestone for tokenized securities, but also more broadly for the convergence of traditional markets and blockchain-based rails, he said, adding that a Deutsche Börse endorsement opens doors for institutional clients who need that vote of confidence before engaging with a firm like Kraken. Let's pause. What did I just say about Goldman Sachs and their brand? You're talking about decades in the business, hundreds of thousands of clients, if not straight up millions of clients, and they carry the name Goldman Sachs. Everybody knows this name. It carries weight. When Goldman Sachs comes out and they try to stall the price of Bitcoin by saying it's a Ponzi scheme, or they agree with Warren Buffett's little friend and say rat poison squared, whatever it is, hundreds of thousands of people are listening to that message. I had a buddy, actually, I have a buddy, and years ago, when I was still living in Lubbock, and that was like this was probably 10 years ago, maybe even 12. I was talking to him on the phone. I was going to get my kids a couple of Happy Meals at McDonald's. I remember the day like it was yesterday. I'm on the phone, I'm talking to him, and I'm like, dude, we were talking about Bitcoin, or we entered into that discussion, and I go, well, did you buy any? And he's like, oh, hell no. I'm not touching that shit. That was 12 years ago. He didn't touch that shit 12 years ago. Legacy finance will literally keep you poor. I swear to God, it is designed to keep you poor. But as we can see here, Deutsche Börse is buying a $200 million stake in Kraken. We've already seen who was it? Oh yeah, ICE, Intercontinental Exchange, bought $200 million in OKX. Dude, they're scrambling. They are literally opening every door and every window they possibly can to get connected to this entire thing. And don't think it's going to stop here. Let's continue on. The investment builds on a partnership the two firms announced in December spanning FX liquidity, custody, settlement, collateral management, and tokenized assets, of course. Under the agreement, Kraken integrated directly with 360T, a Deutsche Börse subsidiary and one of the world's largest FX trading venues, that'd be foreign exchange, giving Kraken clients access to bank-grade FX liquidity. In February, the partnership reached its first milestone as X stocks launched on 360X, that's Deutsche Börse's regulated trading venue, enabling trading of blockchain-based tokens representing real equities and ETFs, each backed one-to-one by underlying assets and held with licensed custodians. And last November, Kraken confidently filed for an IPO after raising $800 million at the aforementioned $20 billion valuation, but the listing has since been put on hold, according to a CoinDesk report. Meanwhile, Kraken Acquisition Corporation, a SPAC sponsored by a Kraken affiliate, completed a $345 million public offering in January, and they're hunting for an acquisition target valued as high as $10 billion. Quote, the market is clearly paying up for those and starting to realize there's big changes afoot, Ravi Tanuku, director at Kraken Acquisition, told Decrypt last month, referencing investor appetite for firms tied to stablecoins and tokenization. I love the name Kraken Acquisition. I got to get my crack. I got to go acquire some crack. But Kraken's got another problem. Extortion. Kraken is also contending with a recent extortion attempt in which attackers claimed access to some customer data, with Chief Security Officer Nick Percoco stating the company will not engage with them and is working with law enforcement across jurisdictions. Around 2,000 individuals potentially had their information viewed, Percoco said, with anyone at risk already being contacted. They're not really saying much about this, but another story has it that this was insider. So somebody inside Kraken is doing this. But that is as far as I know, I haven't been able to confirm that for myself. All we really know in this context is that they're contending with some kind of extortion event. And, it is what it is. Hey, Maple Trade. He's got some maple syrup. Shipping included in price. You can get you some at takemysats.com, Maple Trade maple syrup. And the link will be in the show notes, right? Because there's some hyphens involved and whatever, dude. Anyway, 1 quart for 44,668 sats. This is some of the finest maple syrup I've ever tasted in my life. He makes it by hand. He's got like 250 maple trees, or actually it's probably a lot more than that. But he taps them individually by hand every spring. He gets the sap. He has to boil it down. He does it over a wood-fired evaporator like it was done in the olden days. And he packages it up himself, and he sells it for sats because he is a Circle P vendor. Maple Trade is in the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you want to buy said goods and services, but you will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. Maple Trade maple syrup. He also has on his storefront his Sisters Sarah's handmade tallow soap. So consider, if you're not going to buy your soap from Soap Miner, consider trying this one, because I've had his Sister Sarah soaps and they are also very, very good soap. Right? So Maple Trade maple syrup and Sister Sarah's soaps, you can get it here at the Circle P. Make sure you use the code Bitcoin He might give you a discount, he might not, but it's definitely the only way he's going to know that I was able to make a sale for him here on the Bitcoin and podcast. That would be Maple Trades, Maple Syrup, and his sister, Sarah Soaps. Now, ahead of confirmation hearing, Federal Reserve pick Kevin Warsh discloses some investments in a slew of crypto firms. Apparently, this man's loaded to the gills. The Block's Sarah Wynn is going to tell us about Mr. Warsh. Federal Reserve Chair nominee Kevin Warsh, who has reported holdings in dozens of cryptos, is set to appear before the Senate Banking Committee for his confirmation hearing next week, according to multiple news reports. Warsh will go in front of lawmakers on Tuesday, according to Punchbowl News and Politico. And on Tuesday, Senate Banking Committee Chair Tim Scott told Fox Business that he expects the two-step process, a confirmation hearing, and then a subsequent Senate vote to be wrapped up within the coming weeks. Quote, I believe that we are getting closer and closer to that being a reality in the next few weeks that will allow us to move forward as a committee and vote Kevin Warsh to the floor of the Senate that will get him confirmed in the next several weeks, Mr. Scott said. The timeline comes as current Federal Reserve Chair Jerome Powell approaches the end of his term in May. President Donald Trump openly criticized Powell over the past year for his handling of interest rates. And then later, the Department of Justice brought a criminal investigation against Powell, alleging false statements around a renovation of the central bank's headquarters. Senator Thom Tillis, a member of the Senate Banking Committee whose vote is essential in passing Warsh's nomination, has said he would not vote to advance nominees until that probe is resolved. On Tuesday, Scott told Fox Business he believed Tillis will be a yes on Kevin Warsh. Now, as part of the nomination process, Warsh disclosed his holdings, which includes investments in at least 20 crypto-linked entities, according to a U.S. Office of Government Ethics report. Those include decentralized derivatives trading DYDX, decentralized exchange protocol Lighter, venture capital firm Polychain, NFT-focused company Dapper Labs, as well as Solana and Optimism. Warsh also has investments in lesser-known crypto-related startups like Eluth, Lemon Cash, OnJuno, and Ridian, according to the ethics report. Ahead of President Trump tapping Warsh to lead the Federal Reserve, Warsh spoke about crypto, saying that he viewed Bitcoin as an important asset that can help inform policymakers. Warsh was also an early investor in an algorithmic stablecoin project Basis and through advisory and investor roles with crypto index manager Bitwise. This dude is a shitcoiner. I'm sorry, but he is. We're going to get a shitcoiner for next Federal Reserve Chair. I guess, well, that's if they actually nominate him and then vote him into the chairmanship position. It'll be interesting. Let's see, March, April, May. So May is right around the corner, ladies and gentlemen. Right around the corner. Somebody somewhere is going to sit in the Federal Reserve chair, and they're going to be different than what we got right now. And it's going to be really interesting to see how this all washes out. Now, they didn't say anything about Warsh's, let's see, Warsh. Hold on. Crypto holdings. Because I did see another, oh, good Lord, another story that said that, oh, yeah, here we go. Yahoo Finance. If it'll come up, come on, you can do it. Okay. Warsh has disclosed that he owns north of $100 million of holdings in both all those crypto companies that I was talking about, as well as artificial intelligence. Now, I'm not going to break it down for you because we've got other numbers to go through, but $100 million. Other reports say that literally makes him the richest Fed chair nominee, and if he sits in that chair, will be the richest Federal Reserve chairman in the history of the Federal Reserve. Now, I can't confirm that. I'm not sure if that's true, but that's just what I've seen in a few headlines. And that is just going to make Elizabeth Warren go on the warpath. But let's run the numbers. CNBC, futures and commodities, and energy just getting kicked in the crotch over and over and over again this morning. Murban crude is down 2.5 points to just over $100 a barrel. Brent North Sea down 4% to 95.43, and West Texas Intermediate May contracts down 6.7% to 92.41. Damn, I guess the Strait of Hormuz thing is working out. Well, we'll see. Natural gas also down 1.8% to $2.58 per thousand, and gasoline is down 2.5 to $3.03 a gallon. Palladium is up a point, and gold is up 1.5, back to $4,836 and a dime. Platinum is up 1.25. Silver is up 5.2%, just under $80 a troy ounce, and copper is up 1.7. All of ag is in the green except for soybean, our loser for the day, 0.13% to the downside. Chocolate screaming ahead, over 8 percentage points in the green. And then we've got live cattle, which is up 1 full percent, lean hogs unchanged, and feeder cattle up 0.6%. The S&P and all the rest of the indices are very happy this morning. S&P up a point, NASDAQ up 1 1/3. The Dow is up 2/3 of a point, and the S&P Mini is up 2/3 of a point. And then we got Bitcoin, which was screaming along and looks like it's leveled out at $75,480. That is a $1.5 trillion market cap. I haven't seen 1.5 in weeks, man. We can get 15.7 ounces of shiny metal rocks with our one Bitcoin, of which there are 20,015,579 and 1/4 of. Average fees per block 0.02 BTC, taken in fees on a per block basis. It's about 32 blocks carrying 45,000 unconfirmed transactions, waiting to clear at high priority rates of 4 sats per VByte. Low priority will get you in at 1 sat. And hash rate is, dun, 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 come on, spinning. There we go. 9.85 exahashes per second. So getting some recovery from yesterday's 960 exahashes per second. It doesn't matter. Anything above, 400 exahashes per second is enough protection for the Bitcoin blockchain for me. From straight to weird, yesterday's episode of Bitcoin, and I got Sylvie with a row of sticks. 1,111 sat says, I don't always send a message and boost, but I always do appreciate your content. Thank you, sir. No, thank you, Sylvie. I appreciate you. Turd in the punch bowl with 1,000 sat says, no comment, just value. William the French with 500 says nothing. Code with 500 says nothing. Jason High with 250 says boost. Nick Dose with 190 says cheers. And right back at you, sir. Noster Gang with 101 says nothing. And Pyro Hawk, ooh, I like that. 100 sat says, do you think the quantum fear in Bitcoin is going to zero is to keep the price low? So people don't recognize its real value? Yes. Along with a whole bunch of other things too. But yeah, I do. That's the weather report. Welcome to part 2 of the news that you can use, where Nigel Farage is getting probed. And not by aliens. Nope. UK lawmaker calls for a probe into Nigel Farage's Bitcoin ties. Micah Zimmerman writing for Bitcoin Magazine. Political pressure is mounting in the United Kingdom as regulators face calls to examine Bitcoin promotion tied to public officials, while broader scrutiny of digital asset markets continue across jurisdictions. Liberal Democrat Deputy Leader Daisy Cooper urged the Financial Conduct Authority to investigate Nigel Farage over his involvement with Bitcoin treasury firm Stack BTC. The request follows a promotional video in which the company said Farage executed a £2 million Bitcoin purchase on its behalf. The company described the purchase as a landmark moment in British politics, stating that Farage is the first sitting member of parliament and the first UK political party leader to publicly acquire Bitcoin. Well, Farage had disclosed a prior investment in the firm, raising questions about conflicts of interest and market conduct. In a letter to FCA chief Nikhil Rathi, Cooper cited concerns that Farage's dual role as investor and promoter could expose retail investors to risk. She asked the regulator to determine whether the activity could amount to market abuse or improper influence. Quote, Farage could be using the Trump playbook to put his own interests above the public good, Cooper posted on X, pausing just to say, why are you so interested in Trump if you are in British politics? I mean, does Trump guide everything that all these people do? Is Trump really that powerful that everybody looks to Trump as a way to somehow or another tell a story about their own people in, India or the UK or Ireland or Botswana? It seems a bit hyperbolic to go, oh, well, we don't even live in that country yet. We're going to use their leader as why don't you just use Putin? You want to disparage Farage? Just compare him to something Putin did. Why Trump? I don't know. Fucking weirdos. The FCA confirmed that they did receive that request and said that it's going to review the matter. Well, the controversy also touches on political financing. Cooper pointed to a £9 million donation to Reform UK from crypto investor Christopher Harborne, which she described as unprecedented in scale. She argued that financial ties between political actors and digital asset firms could, blur the line between advocacy and self-interest. Like there's ever been a line between the two when it comes to political donations. Are you freaking kidding me? Well, whatever. Farage has promoted policies aimed at expanding cryptocurrency adoption, including proposals for a national Bitcoin reserve and tax payments in digital assets. And last month, the MP invested £215,000 in Stack BTC through his media firm Thorn in the Side Limited, taking about a 6.3% stake as part of a £260,000 fundraising round for the London-listed Bitcoin treasury company linked to former UK Chancellor Kwasi Kwarteng. God, I can't pronounce that, but whatever. The raise included participation from blockchain.com and involved issuing 5.2 million new shares at 5 pence each, with listings planned on the Aki growth market. Farage, a longtime Bitcoin advocate, has called for a Bank of England Bitcoin reserve and pro-crypto legislation, while his party Reform UK accepts Bitcoin donations through payment firm Ratum. Stack BTC focuses on Bitcoin treasury management and institutional storage services, with backing that also includes investor Christopher Harborne. I'm not going to say that it's a conflict of interest for Farage to buy Bitcoin from a company that he has a vested interest in. And the reason I say that is under these circumstances and these circumstances only. He actually bought Bitcoin, not a derivative product. And he actually holds the Bitcoin in cold storage. I'll even let him have a hot wallet for that, but he's got to actually be in control of the keys. And it can't be making any yield off of it either. Not directly through the company. Now, that wouldn't mean that he wouldn't be able to take some of that Bitcoin to a different company that he doesn't have ties with and say, hey, get me some yield, whatever. I don't recommend doing that to anybody, including Nigel Farage. Just buy the Bitcoin and hold the Bitcoin. But what I'm reading here, I just don't think the Financial Conduct Authority in the UK is going to find much here. He's share owner of a company that's able to buy actual Bitcoin, not and he did that. He bought actual Bitcoin, not a derivative product. if, like I said, that is indeed the case, I just don't think the Financial Conduct Authority has any financial conduct to investigate here. That actually looks above board. He's not like returning it to a different company that he also has something that he's also involved with and taking a loan out on it, right? And that's where that WLFI stuff that I was talking about yesterday comes in, or actually on Friday comes in, is that's where it gets sketchy. Because now you got multiple products and you're interchanging them between companies that are owned by people that also have a vested interest in what's going on, and there's yield involved and derivative products involved. And it gets so messy so quick that's when people like the FCA would want to say, well, let's really look at this. If it had just been WLFI bought raw Bitcoin, I wouldn't give a shit. But that's not what they did. But that's what it looks like Farage is doing. So honestly, I don't care. I really don't. But I do care about this. Remember what I was telling you about G Love, the musician that lost 5.9 Bitcoin in a ledger scam? Turns out he's not the only one. Fake ledger app steals millions of dollars in crypto, Bitcoin from holders, including musician G Love, Logan Hitchcock, Decrypt.co. A fake Mac app impersonating Ledger's self-custody software led to the loss of more than $9.5 million in crypto assets from over 50 total users in the last week alone, according to a new investigation from ZachXBT. The application, which pretended to be the Ledger Live app, from which users can manage assets held by Ledger hardware devices, impacted victims from April 7th until April 13th when it was removed from the Apple App Store. Stolen funds were laundered via 150 plus KuCoin deposit addresses tied to Audi A6, a centralized mixing service that charges high fees to launder illicit funds, ZachXBT posted in a message on his Telegram channel. According to his analysis, at least 3 victims lost more than $1.95 million apiece, with one wallet being drained of 3.27 million USDT. Swiped assets include Bitcoin, Solana, XRP, USDT, and others. G Love, a.k.a. Garrett Dutton, frontman of the long-running rock band G Love and the Special Sauce, was among the victims impacted by the fake app, losing exactly 5.92 BTC, valued at around $447,000. Quote, I had a really tough day today. I lost my retirement fund in a scam when I switched my ledger over to my new computer and by accident downloaded a malicious ledger app from the Apple Store. All my Bitcoin gone in an instant, end quote. The fake app would remain in the App Store for nearly 2 more days, according to ZachXBT's analysis. Of course, a representative for Apple did not immediately respond to a request for comment. Upon noting that the stolen funds had been traced to KuCoin, the exchange's support team responded to the musician indicating that they had frozen a suspicious account related to the funds. Quote, please note that while we may assist in freezing the suspicious account upon receipt of relevant information or a credible complaint, such actions are still subject to due legal documents and processes to ensure compliance, it posted on X. The exchange has reportedly been dealing with an increase of illicit activity on its platform, according to ZachXBT. Last month, it was barred from offering access to U.S. users unless it registered as a foreign board of trade. Last year, KuCoin was hit with a $14 million fine, the largest ever anti-money laundering fine in Canadian history by the nation's financial regulator. Fake apps and websites are among the most common phishing vectors for Ledger users, according to the firm's dedicated phishing campaign page, along with fake calls, emails, and letters. The U.S. Attorney's Office for the District of Connecticut recently recovered $600,000 worth of crypto assets that had been part of a fraud scheme using fake letters purported to be from Ledger. And if you remember, I brought you that news when that came out. Those letters looked really good. They were physical letters. It wasn't email. Physical letters being sent two people that had their addresses hacked because of Ledger's really shitty security policies around their customers' data. They were getting physical letters that looked awesome. I mean, they looked really nice, really nice. But there was like a spelling error in one part, and somebody picked up on that and started looking really heavily into it and discovered, oh shit, this is a scam letter. And I brought you that news here on the Bitcoin and podcast. A representative for Ledger did not respond to Decrypt's request for comment, and Ledger has also not issued a public statement about this recent phishing campaign. I decided to stop using Ledger for two reasons. One, I have a total of 3 Ledger devices, and you might ask yourself, why? Is he into multi-sig? No. They kept fucking breaking. And the way that they broke was this: updating the firmware. It would just freeze and brick. And that happened to me twice. But before the second time it happened, they released Ledger Live. And then I discovered that the only way that I was going to be able to transact with my Ledger in the future, before it was bricked, was to basically expose my keys on the Ledger device to the web in real time. And I was just not willing to do that. So I go, okay, I'll update my Ledger, because that was where it happened. It was like, oh, you've got to use, because I used to be able to use my Ledger without Ledger Live. But then I get this message one day and it said, hey, if you want to do this, you got to use Ledger Live. And I'm like, oh, screw you. So I updated the firmware and it bricked. That was the second Ledger that I lost to a firmware update. I ordered, and I didn't need to do this. If I had known better back in the day when I did this, all I would have done is I would have bought a cold card. I would have used my seed phrase to recover my wallet inside the cold card, and I would have never had to give Ledger another $100 at the time. That's what a Ledger X cost me. And I wouldn't have to wait for it to come in the mail, so that I could do one thing with it and one thing only: get my shit to another wallet. This is an important aspect for people to understand. When you get a hardware wallet that generates your keys, and it gives you your 12-word or 24-word passphrase, whichever one you set up with, and you write those words down, and the path. Okay, there's also a path, which kind of looks like a file address, and I can't really remember what they would say, but it's like, if you have the path and the 24 words, you can recover your Bitcoin wallet anywhere in the world on any device at any time you want, whether it's web-based, and I do not recommend ever do not ever do that, but you could, just don't, or a hardware wallet. As long as you got the path and the 12 or 24 seed phrase, you don't have to, like, if you're in a situation like me where I'm like, shit, I got to order another one so that I can get my Bitcoin off of it and put it onto a wallet that's reliable, that doesn't force me to connect to the damn internet, right? You won't have to do that. So please, please, please learn from my $100 mistake. Learn from my $100 mistake. Your seed phrase and the wallet path. It's not exactly, it's called something else. Wallet path is probably enough for you to like type into Google and say, hey, what is a hardware wallet path? And then it will give you examples, and it will probably give you the correct name. But with those two pieces of information, the seed phrase and the path, you'll be able to recover your wallet on any device. Oh, well, let me say almost any device. Just use a freaking cold card. Okay, you can recover any wallet anywhere at any time, as long as you got the path and the seed phrase out of a cold card hardware wallet. Just go to CoinKite, tell them Bitcoin and sent you. They're not a sponsor of the show, but they should be, honestly. UK, back to the UK. Claude Mythos preview autonomously completes cyber attacks. This is out of Atlas 21. The UK AI Security Institute published on Monday The results of its own evaluation of Claude Mythos Preview, Anthropic's flagship model, which is, of course, not yet available to the public because they're in the middle of their scare marketing campaign. The test confirmed that the system is capable of executing sophisticated cyber attacks autonomously with success rates unprecedented for an artificial intelligence model. The mere existence of Claude Mythos had surfaced in late March through a website leak, with Anthropic subsequently confirming the model's capabilities and findings in exploiting cybersecurity vulnerabilities at a level never before seen. During the pre-release phase, the system reportedly identified thousands of zero-day vulnerabilities autonomously, many of them dating back 1 to 2 decades, present across all major operating systems. Anthropic has chosen not to make the model publicly available, granting limited access to dozens of security research firms. Test results show that Mythos Preview achieved a 73% success rate on expert-level capture the flag tasks, which are challenges that no AI model was able to complete before April of 2025. The model became the first AI system to complete, quote, the last ones, end quote, a corporate network attack simulation structured across 32 stages, which normally takes a human approximately 20 hours to complete. Mythos Preview completed the simulation in 3 out of 10 attempts, progressing through an average of 22 of the 32 total steps across all runs. The simulation covers the full cycle of a real-world intrusion, from initial reconnaissance through to complete network takeover. The next best performing model, Claude Opus 4.6, averaged only 16 steps. The British Institute also noted that Mythos Preview's capabilities continue to scale with increased computational resources, using up to 100 million tokens per evaluation session. When explicitly directed and given network access in controlled environments, the model demonstrated the ability to execute multi-stage attacks and discover vulnerabilities without any human intervention. And what have we learned from all this today, boys and girls? Start really investigating using free and open source software on your own machines at home. And how do we do that? By tunneling into those machines to serve up our photographs, maybe our financial data, our Bitcoin wallet, and all the stuff that we may want to just say, you know what? I don't really want any of this stuff on the web with things like freaking Mythos crawling around. God only knows what the hell it could discover. Like, I don't know, whatever information you're putting into other AIs like OpenAI or whatever. Maybe you just want to handle all this shit at home. Yes, I know when it comes to the AI models, you don't have the compute necessary to be able to execute a lot of the stuff that you would normally be able to do. But we need to start at least thinking this way. It doesn't mean go do it. But it does mean, if you've never looked at what FOSS, free, FOSS, FOSS, free open source software, if you've never really examined that world, it is time to examine that world. And protocols like Nostr. You know, get off of X and Facebook and Instagram and start using open protocols. Use free and open source software. You know, like there, what is Linux? Linux has somebody did was it OpenDocs? Has a full, I think it's called OpenDocs, a full suite that completely replaces Microsoft's Office suite. You know, you got like a text editor, like, you know, Microsoft Word, you got spreadsheets. Yes, they're not as fully robust as Microsoft stuff, but honestly, how many of the tools in Microsoft Excel do you use? Are you really making like really heavy duty financial models, or do you just need to figure out what the hell your checking account is doing? Just like OpenDocs is completely free. Like GIMP, GIMP. Do you use a lot of Photoshop? You can use GIMP. It's actually very good. There's also another one that's even better than GIMP that's free and open source for stuff that replaces Photoshop and, like, you know, if you need it for painting or you know, whatever, digital art and all that kind of stuff. There's several, and they're free, and you can just donate to the developers, right? There's and there's also, like, I used to be a heavy user of 3D animation software, and one of my favorite ones was Houdini from Side Effects Software, and I still love that package to this day because it can do stuff that no other package can do, except for, oh, God damn it, I just had it on the tip of my tongue. Hold on. No, I can't let it go. Blender. Sorry, I had to go find it. Blender. It will completely replace Houdini. Now, I mean, even to the point where you can use it because it has already been used heavily for graphic effects in Hollywood movies. Houdini definitely has. I mean, if you've ever seen a Marvel movie, you've definitely seen the work of Houdini. But Blender, getting there, man. Completely free, open source. You can donate to the project. You do not have to use any of the shit that we use today. Right now, I'm on Windows. I literally have Windows XP. Now I'm doing all my shit right now on a computer that is operating an ancient operating system. Dude, my next operating system is Linux. I'm done. I'm not going to, I mean, I've got a laptop here with Windows 10 on it. I am done. I don't need any of this crap. And with shit like Mythos running around, and it's going to get worse. And yeah, there's going to be companies that say, oh, well, we can protect you for $50 a month. I'm done. I want out. And the way out is open source protocols, open source software, and open source networking. And the whole networking thing, you got to go to Start9. And look, they're about to release a router that's going to take care of you in ways that no router has ever been able to take care of you before. And nobody really ever looks at their router in their home. You know, it's the thing that all your kids, their phones connect to, your TV connects to it, your computer connects to it, your other computers connect to it. I mean, if you've got a wireless fire alarm in your house, it connects to it. If you use ThermPro products like I do for, like, you know, like a meat thermometer that I can connect to my phone, hell, it uses my freaking Wi-Fi. I mean, everything is connected, and all the Wi-Fi and all the, even if you cable in, you're cabling in through a router. And once you plug it in, as long as you get internet, you essentially basically don't ever touch it because it's kind of a bitch to get into. Start9 is going to release a router that is going to make you actually interested in using your router in ways that you never thought you would use a router, because it's going to make the interface so easy. It's going to make the interface really easy, and it's open source. It doesn't mean that it's free. I mean, you're going to, like, if you buy, well, I don't know if they're going to release the operating system for the router free. They do have something that is something about that, something about tunneling, if I remember right, that they are releasing for free. But I want to buy the actual box that they're going to be building. I want that router. That's the router that I want. And again, it's based on open source technology. If we don't start moving, or at least thinking about moving in this direction, there's going to be a lot of us left out in the wind to twist, because this Mythos thing, even if it's complete bullshit right now, if it's a bullshit marketing story, which is my primary thought at this point, it won't last as a simple marketing story. There is real danger here, and everybody is exposed. Free and open source software, open source networking, open source protocols, not platforms, protocols. Primal is a platform, kind of. You know, Ditto is a platform, kind of. It's a client, but its underlying base uses the Nostr protocol, which is an open protocol. This is the only escape hatch that is even remotely viable at this point. If you're not looking into these, you really do need to look into these. Sorry for the aside there. It's just really important. Last up, Foundry launches Zcash mining pool, notches 29% hash rate in its first month. This is out of Cointelegraph. And you may ask why I'm going to discuss a shitcoin. I'll get to that at the end. Just hold on. Crypto mining pool operator Foundry Digital has launched a pool for the privacy-focused cryptocurrency Zcash, which the company says has secured nearly 30% of the Zcash network hash rate through partnerships with multiple institutional mining clients. Quote, institutional and public miners are seeking a compliant, purpose-built Zcash mining solution, Foundry said on Monday, a month after announcing its plan to create the Foundry Zcash pool. Foundry, which is also the largest mining pool on the Bitcoin blockchain, did not disclose which institutional miners had onboarded. Mining pools secure proof-of-work blockchains by pooling compute power from commercial miners and others to share rewards proportionally with the aim of reducing variance. Foundry added that it launched a Zcash block explorer, which shows that the Foundry Zcash pool has mined 2,300 blocks since it launched earlier in the month. While Foundry said it launched the Foundry Zcash pool earlier this month, Zcashinfo.com data suggests it actually started accumulating hash rate on or around March 4th, about a week before it was first announced. Well, yeah, I'm not surprised. Foundry's rise in hash rate share has cut into Via BTC's dominance, which has fallen from 68% on February the 27th to 37% at the time of writing. Crypto exchange Coinbase flagged Via BTC's hash rate dominance as a security risk to the network, Zcash network, in September of 2023. And Zcash has been one of the better performing cryptocurrencies over the last year, rising a certain amount of percent with a rally and blah, 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 blah. It is now the fifth largest proof of work token at $6.2 billion market cap. Why am I bringing it to you? Because shit coins are never going away. I keep telling people that. I keep hearing people going, oh man, Bitcoin will finally burn out the rest of this crap. It's never going away. It's like what Jesus said about the poor. I have only a little time upon this planet, but the poor will always be with you. Just like shit coins. I mean, the poor are much better people than the people behind shit coins. I'll give them that. But these things are never going to fucking die. And the reason I'm bringing you this one is that why all of a sudden did Foundry decide to get into Zcash mining? I think it's an early sign of a new bull market across the entire crypto regime, Bitcoin included. We're seeing some pretty good pops lately, but I mean, I don't mean it's actually starting right now and you're going to see a $10,000 candle tomorrow. It's not what I'm getting at. I'm just seeing people position themselves with a fair amount of cash to be able to mine a shit coin. It smells familiar. This is what I'm getting at. It smells familiar. And just again, the reminder that the shit coins will always be with you. The shit coiners will always be with you. Kevin Warsh, if he gets confirmed, is going to be a sitting Federal Reserve chairman who is a solid shit coiner. They're never going away. It doesn't mean embrace them. It doesn't mean buy them. I mean, intensify your message about how these things are just crap. We don't need them. We just don't need Monero. We don't need Zcash. We don't need any of this bullshit. We certainly don't need Ethereum. But they're never going away. The people keep finding somehow or another, they find it within themselves to lie long enough and hard enough for them to say, I'm going to peel off a whole bunch of cash and buy Zcash miners. Oh, for fuck's sake. Oh my God, it's killing me. It's killing me, guys. It's absolutely killing me. All right. That's it for today's episode. Please donate to the show. Give me a 5-star review on any one of the 4 major podcasting platforms. That would be Spotify, Apple Podcasts, Amazon Music, and YouTube. And I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.